Hey everybody, excuse me, voice is still bothering me today. Sorry about that. Just setting up a stream on the other side here for those that can't log in and chat on YouTube, either because of firewall workplace restrictions or computer restrictions, stuff like that. So give me just another minute or two and we're gonna get rolling here. We'll take a look, excuse me, we'll take a look even at Bitcoin, maybe some altcoins. We'll take a look at traditional markets, and we're going to talk about swing fail patterns today. That's going to be the discussion topic after analysis. So I won't be taking too many requests for alts, but if you do have any requests for alts, that would be in the YouTube chat here or in the stream that's now booting up over here. You guys should start hearing me soon. Go ahead and put your requests in now, and we're gonna get rolling here. So give me just another minute or two. I'm just gonna make sure that they are getting their stream. Audio sounds good, and we're gonna go from there. So see you in just a moment. All right, I'm gonna get the music down here, and I'm doing something a little new today. So I do have a stream going out to you guys over on Parsec, and I need to know if you can see that. Let me turn the music down here, as we are gonna get started. Okay, so you guys can hear me okay over there? How about you guys in YouTube chat here? Can you hear me all right as well? Need to make sure I didn't turn off the mixer setting for the YouTube side of the stream here. Yeah, for you guys over in Parsec, I am going to jump out of the voice chat with you now, and we're going to go to just text chat only. And for those of you on YouTube, if you can let me know if I sound all right, that would be great. All right, so looks like I have one good there. Okay, we're going to get this rolling then. What's up, big dog? Hold on one second. My dog needs me. What's up, buddy? You can go lay down. You can go lay down. You can lay right there. Brought your bed in. All right. Dog is taken care of. Okay, we got some more people over here in Parsec. Hi, guys. All right, yep, I will be, going to be starting here in just a second. And I see No Name, hello. Spin, hello. Dr. Pepper, hello, sir. I don't think I've seen you in one of the live streams before, at least not chatting. And Broca, Spin B, hello. All right, so let's get this main chart set up a little better here. We're going to get rolling. Don't need that. Okay. Hello and welcome to Friday Bitcoin live stream here. Well, welcome to the Friday Bitcoin live stream here on Landy's Crypto Corner. I am your host, Landy. I'm a little sidetracked. My apologies. But we're going to talk about the markets today. We're going to take a look at possibly the closes if we're still live for traditional markets here in just a moment. Well, in about an hour, not just a moment. But we're first going to, of course, take a look at Bitcoin. We're going to take a look at some of the longer term timeframes just to prep for the weekly close. We do have the monthly close coming shortly thereafter. And then we're going to take a look at some of the lower term timeframes and possibly a few alts. I have a few that I'd like to check on as it relates to kind of the direction that may be presenting itself on Bitcoin. See if that is also presenting itself on some of these alts. And then we are going to, I had a request for Dixie, and we did do Dixie on Wednesday, and we're going to follow up with that today as well. And then we're going to talk about swing fail patterns. So the last bit of this is not going to be the normal taking requests, but instead a topic that was widely agreed upon by you guys that I cover for you. So we're going to be talking about SFPs. So let's just jump into Bitcoin here on the daily. If you had watched the Bitcoin in 60 seconds videos or video from yesterday specifically, in this case, I did something a little different, didn't have the levels on the chart, but instead pulled a fib. And that fib is a fib from the just the high to low of this move, just to get some important retracement areas. So the closes for Bitcoin have been coming in above the 618 of this particular fib pull. And if you want to reference this for your chart, it's just the last move up. So the lower low to the higher high area, from high to low to get the retracement areas of interest. And that was the 31,800 to just under $25,000 low there at 24,750. Now the 618 is at 29,150. Bitcoin has been closing candles above it, and it could even close candles below it as long as it does not break the wick low on a close at 28.8 here. Otherwise, of course, that would be below the lower second standard deviation of the Bollinger Bands, thus providing further expansion to the downside. And I would be targeting where the lower third standard deviation of the Bollinger Bands is currently coming in, and that is at 28,300. So in this case, it's Bitcoin's in an interesting spot because it's in between, the overhead resistance and a pretty major support area where the 28K on the support and resistance chart that I've already shown many times is the weekly support area, and there is a daily set of supports there at around 28 4 to 6 here at the daily support levels. So the fibs are lining up in some pretty important areas. In addition to the 50% fib coming into that important support zone and lining up pretty much perfectly with the lower third standard deviation today. Now that's likely going to change after close today, but if Bitcoin did lose that weekly support at 28K, the 382 is coming right into that daily support at 27.5. And there's kind of a zone there. Realistically, you could say 27 to 27.5. I have 27.5 to 27.250 marked here, but there is a good case to be made for support at the 27K area as well as a nice even number. To be honest, if it did lose the 382, I would be looking a little bit lower than 27,000. So if it did lose that 27.5 to 27.250 area and not bounce back above, like let's say it hit 27K and didn't bounce and regain this area as support, then I'd be looking down to the 272. And yes, I know it is not a 236. I actually have a 191 on here. But the 272 would be coming in at 26,800 or so. In fact, no, I'm sorry. That's actually 26,700 or so. So 26,700 to 800. You could give it a zone, 26,600 to 8. And under there was 191 because I am using an 888 on the other side. So we're just kind of equaling things out here. Now, the big things that I'm looking for here on the daily, and we are going to get to traditional markets in just a moment, but I want to head over to Bitcoin here on my other chart. Oh, yeah, I was I was checking on the anchored VWAPs. That was just a follow-up for one of you guys in chat there, and I was going to talk to you about it, but I actually got busy. That was for you, JR. I was going to talk to you about the high anchored VWAP and the low anchored VWAP in relation to a volume weighted or a volume profile area. So, but that's something maybe we'll talk about in a little bit. We have some EMAs here that I wanted to take a look at. Now this is in the Landy Bands with Trend Checker indicator. You can turn on the moving averages. I just turned off the Bollinger Bands for right now so that I could take a look at some of the moving average setup or moving averages setup. And we do see that the 9 is right there at 29,500, which has been spiked again. 9 is under the 34 and 21 EMAs here as well. So in this case, that 29,750 or so is coming right in at the low side structure on a closing basis of the range above. So, I do think that if Bitcoin is going to reverse here, one, it's got to take out yesterday's wick high on a close, and that is coming in at 29,571. So above there, I would look for it to go test further up in and around the closing structure at around 29.8. And that is where things get a little bit more interesting, as I do not think that it would automatically come right back into range. There is one spot in particular that I would be watching, though, and that is going to be the basis band here. The basis band is, just under $30,000. But if Bitcoin were to reclaim this area, and specifically the breakdown candle from Monday, the 24th, that open was at $30,081. Then I would be looking for it to head up and test, around 30,300 to 400 at the wick highs here, which is also a weekly resistance overhead. So I would be looking for that area to get tested if the basis band did get regained. The weekly area is at 30,300, and the wick high that I would be targeting here is coming in at 30,421. So that's the big test. Regaining 30,000 on a close would give me the indication that the weekly to the wick highs of this downtrending move would be tested. And if that area were to be closed above, then I absolutely would be looking up to around 30,500 here at the upper first, to around 30,800 initially, and then I would raise my targets to 31 to 31.2, and probably the highs overall at 31.5 after. Especially if we did see closures back above the upper first standard deviation, I would expect short-term resistance and slight expansion around the upper second standard deviation at 31 to 31.2. Then come back to it and see about some of the further upside targets within this range. But Bitcoin is still playing on, just consolidating below the range right now. So the only way to really turn that into a deviation would be to get closes back above 29.8. And realistically, you want to see 30K or the open of the Monday candle here at 30,081 reclaimed. So basically the basis band of the Bollinger Bands here. Then I would consider this a deviation, a bit of a bear trap, probably run things right the other way. So that's basically what I'd be looking for in regards to Bitcoin here. And a lot of that is predicated on not just putting in a low, but a low that I do not believe, there's a case for like really long-term divergences, but they're not relevant. It would be in trend divergence is what you want to see. But I really would just be looking for the low to be set, and then we move on from there. Now, to get the Stoke pivot here, we could see that Stoke is turned up on the daily, and it is pivoted at 29,167. So that is going to be below yesterday's closing low, and that would also be below the Monday closing low. So close below the lows, we're going to see Stoke turn. We're probably going to see a sweep of that 28.8 and probably head into that support down at 28.4 to 6, and possibly even 28K if things really got rolling to the downside. So right now, there's not much to be made of direction, even though Stoke is pressure up on the daily. It's very close to price action. So what I'm actually going to watch for here, and this was a bit of a trendline regression from the 12-hour that I pointed out, and I want to say it was last week. It was last week. So this area here, this is around the 13th. One second here. Okay. Yeah, sorry, there was something going on behind me in my house here. The trend line regression here, if this is broken, we're likely going to see, Bitcoin, attempting to push its way back into the overhead range through that resistance area. So that would be on, continued momentum to the upside here for Stoke is going to be above 29,175. That's going to be really interesting to watch for, especially coming into the weekend. So, I mean, we're on the heels of the daily close for traditional markets right now. I mean, they got about an hour, and then there's post market, but while there might be some, funky business over the weekend, weekends have been fairly quiet. And post FOMC was fairly quiet. Even during FOMC, it was fairly quiet. So, I mean, if bears were going to dump it, that was kind of their shot. So, from just an anecdotal point of view, you know, I wouldn't be surprised if it went down and hit some of the supports. But in terms of like a real big dump, I think it might, if it is going to dump, I think it would be a slow motion dump with some larger candles in between. But I haven't seen we haven't seen follow through, even outside of the range here. We're seeing very little follow through to the downside. There was very little follow through to the upside once it hit the 31.8 overhead resistance here at the wick highs. So, just keep a close eye on it. 29.8 is the closing area to be looking for from a candle close perspective at the lows. And then watch 30,000 to 30,100. Above there, watch that weekly to the wick highs over here. And that would be a very interesting setup because I do think beat that area out, it's going to run to the top. And then just watch the wick low. 28.8, if that area is dropped, 28.4 to 6, 28K, definitely on the board there. And I would, to be quite honest, I would be looking for some good bounces from those areas. It doesn't necessarily mean that because I'm looking for it, it's going to get a good bounce. The other thing is the 2-day. Now, the 2-day time frame is going to close on the Saturday daily candle. So this kind of a setup with the basis band slope in relation to where Bitcoin is trading against that lower second, kind of held on to the lower first. It's now holding on to the lower second and bouncing from that area. If anything, from this setup and my experience, typically you would see this bounce up to the lower first and basis band area. And if it is going to be bearish, well, guess where the basis band is? It's cutting right across those highs at around 30,300 to 400. And if it was going to reject there, then that would be a failure. You get a lot of people long on the reclaim of the closing lows and then fails the high or swings it even to the upper first here at around 30,800. That's why I'm saying in my Bitcoin in 60 seconds videos, wherever the lower first is, like right now, the lower first on the daily is at 30,500 on the 1 day. Here on the 2-day, it's at 30,800. That's why when I was talking about that in the Bitcoin in 60 seconds videos, it's 30,500 to 800. If it can reclaim that area, then I would look further up, right? And it's kind of the same setup here. It would still be bearish below the upper first standard deviation on the 2-day. So it's got to beat out 30,500 to 800 and reclaim that area on a close to go test further up. And we can see the upper second standard deviation is at 31.4. Now, the band setup that this is presenting is a typical bounce off of, in this case, the lower second on a compression. So the rejective areas would be to the upside. I got you, Titan. Go. Sorry, my dog's, he's decided that now is time to play. Go, bud. Go ahead. Go lay down, buddy. You're going to start barking at me, aren't you? You're going to hear a big dog bark here in a minute, I think. Now, below the lower second, if it just dropped the lower second here at around 29,125 here on the 2-day, then I would be looking to the lower third to be that. I would be looking for this area to hold up, especially on a close. And that is actually coming in at 28,555. So basically 28.6. So you can see how all of these things kind of work along with each other in terms of support and resistance and bands and volatility. So that is kind of where I'd be looking on both sides of this for Bitcoin. Now, when looking at the market, with a little bit more context for alts, I will go and take a look at ETH here. Now, ETH on the daily, the daily is, has regained, I should say, the lower first, and it did hit the downside area that we had talked about prior. I don't know, this was maybe a week or two ago at this point when I had put down the support and resistance areas, but ETH, came into the support zone here. It lost the lower first and then pretty much regained it right back. And as long as it's above 1856, it's going to have a shot at that basis at 1892 to 1900 up here at the wick highs. There's a couple wick highs just above 1900 at 1905 here. So that's kind of where I would be looking. If ETH can regain 1905, then I would be looking for it to head to the upper first standard deviation. This would bode well, obviously, for Bitcoin, and back below the lower first for ETH at 1857, it back into this support zone likely means that Bitcoin's also taking a bit of a move down as well. Whether or not it's playing on the current lows or lower would remain to be seen, but if I'm looking at ETH below 1857 to 60, probably not. The market wide is probably getting a pullback, or there's a pullback market wide. How about I say that the right way, right? And but trading up towards the basis band, it is showing the signs that it wants to attempt to set a low of some sort. So we'll have to see what it closes like today, but we can also get a little bit of an edge by looking at the momentum pivot, and guess what? It's 1854, which is underneath the area that I just spoke about at 1857 to 1860. So if it does get a cross up, that would probably bode well for it to test up a little bit further into that basis band area around 1892 to 1900, and then I would just keep a close eye on it around its wick highs at 1905. But caution below that 1860. 12 hours showing upside above 1847. This is actually what you want to see on a bounce like this. Is you want to see as you go the lower term time frames, it gets further away from them. Right now it's set a low on the 12 hours, so you want to see these pivot numbers go down to the actual lows in most cases as you go down the time frames. 1864, 12 hours kind of an outlier there. 1873 on the 6 hour, 4 hours getting across back up at 1864. So it's kind of a little bit of bifurcation. I'd wait for the daily and possibly even the 2-day. Now the 2-day is pressure down below 1914, so I would check back on this on Saturday when this closes, just to see where its momentum pivot is on the 2-day, as it's basically going to be this. This is 1890 up here on the 2-day closing structure. So honestly, if it closes above 1888 to 1890, well, that would be around the base. That would be above the base, or well, it wouldn't be above the basis band, but it would be around the basis band on the daily. That would start to paint the picture of a low being set on the 2-day. Doesn't necessarily mean that it's just going to rocket ship itself up, but I do think that it would test higher to some of those areas. Of course, back below the lower first at 1861, so basically 1860 on the 2-day, and it's headed back into the support area, probably around where the lower second is at around 1830, 1825 to 1830 down here. So, relatively crypto is presenting a relatively confusing look, especially when you start looking at weeklies, because ETH is up on any closes above 1800. And now we're going to get into kind of the last part of this. Bitcoin is up on any closes above 29,960, but it's under that right now. So, of course, that would be an initial cross down, whereas ETH for the weekly would get a fully confirmed. I mean, this is technically a fully confirmed signal. Both the K and the D read are pointed to the upside. So what does that kind of tell me? It kind of tells me that I'm not really looking for a huge dump off. And if there was a big move intraday to the downside, I do think it gets picked up fairly quickly. Doesn't mean I'm going to be right, but that is my take on Bitcoin and kind of crypto in general. We can take a look at total market cap as well. I will jump into the chats, but just to answer some questions, kind of see what's going on there. Got the two chats up over here, and then I'll see what you guys are talking about there. And then we'll get into just a quick look at traditional markets and Dixie, and then we're going to talk about swing fail patterns. So yeah, weekly around the basis band again. Right now it's at 28.5, so you want to see bounces there. And again, 27K is the lower first, just as a reminder as we come into the weekend. But so that's, you know, kind of lining up with your support, your SR levels. It's also the wick lows over here and the closing structure on, or the open structure rather, of the first week of June. So, you know, there is precedence to be looking in some of these areas to the downside, and then to the upside, it's 29,955. So it's 30K, just as a reminder for the upper first on the weekly chart. So, all right, so let's go ahead and let me take a look at chat here. Hi, Ivan. So we've got Roca, we've got Dr. Pepper, Spin, No Name, Ivan, in the YouTube chat over here that are chatting so far. I see that there's others in here as well. You can go ahead and chat, say hi in the chats, and let me know if you have any questions. And then we're going to go take a look at traditional markets here and Dixie. You know what? I might actually, yeah, you guys are right over here. So the other chat is saying, why don't you check Dixie first for us, please? We know it hit one of your upside targets. Okay. But I did want to just read over here in YouTube chat for just a moment. Give me just a second, guys. Add me in Discord. I don't have a public Discord. It's just a Discord with friends, and there's a lot of personal stuff in there. So there will be a public Discord. Roka did. Yeah, I'll announce a public Discord when I get it set up. I'm just working on getting it set up, guys. Because, you know, I know that there's a lot of, it's just me, right? I don't have moderator. I don't have like a team. It's just me. So I got to get it all up and running and rolling. And then, you know, I got to see if some of my friends would come over into the Discord and be moderators and stuff like that. So just, no, it's going to be free as well. It's not going to be like a paid thing. It's going to be a come hang out. You know, there'll be a place for, you know, resources and educational materials, and then of course my videos and my thoughts on things, and then a place for you guys to chat and exchange information like charts. And trust me, Ivan, Roka is one that will definitely share charts with you in the correct venue, which would probably be a public Discord. So, all right. Yes, guys. Yeah, I'm gonna take a look for those of you asking over there. I don't know some of you guys that have just jumped in on the on the Parsec stream. Yeah, I don't know some of you guys. If you could just put your names in the chat there. I can't hear you. I'm not in the voice chat with you guys. So go ahead and put your names in the chat down there, and I'll so that I can say hi to you. And for right now, I'm going to check on, we're going to take a look at gold, and we're going to take a look at Dixie, and then we'll go take a look at traditional markets. All right, so Dixie on the daily. All right, so you may remember I had mentioned that the upside targets that I'd be looking for were the basis band around 101.5 or so. I mentioned back to the highs on the pullback here. So the other day we were looking at this on Wednesday, it was headed down, and I'd mentioned that I thought maybe based on the momentum setup here, that that we'd probably see a bounce at the range reclaim here. The next big area was the basis at 101.5 to 101.60, 569 area. It did hit that, and then the next big area is 102. It has hit 102. It is painting a doji. It is above the basis though, so that also created a bullish divergence over here. So it's in and around the 50 read of the RSI. It's a midline. It's kind of normal for these things to pull back around some of these key areas. So again, if it does push through the 102 area, I would be looking to the upper first at 102.50, and then right where that upper second standard deviation is, it's from its current position would be lining up right at the resistance and probably just below it at the close today for a nice rejection right at these highs over here at 103.60 or so, maybe slightly under there. That's provided it could even get above the upper first standard deviation at 102.5. To the downside, of course, it's all about this trend line here, or this support line here, and that's coming in at the 182 cents. So 182 below there. It's still good down to the last wick low, and the last wick low is coming in at 155 cents. So below there, I would be looking down to the lower first at 125 or so, at 125 cents. Let me be clear. And other than that, if it did start falling apart below there, it's right back to the lows here around where the lower second standard deviation is. So I don't really have a strong opinion as to what's going to happen. I mean, if it closes on a doji, the easiest way to take it is back above this resistance here at 102. Probably going to head up. If it closes below the doji wick low, if it does close as a doji today, just take the low there, 101.35. Probably going to head down and test the higher low that it tried to put in here. It did put in, quite frankly, on a bullish engulfing candle. So, from a candlestick pattern perspective, first past rejection at this, overhead resistance, not uncommon at all. But if it did start painting below that doji, I'd be looking for it to come down and test, 101 to that upper $100 area. That, to kind of put that in perspective for those that I have talked about this, for you guys over here asking, gold. Gold on the weekly is the interesting setup. The daily is not as interesting as the weekly to me. The weekly is going into a Bollinger Band contraction or consolidation right now. So this is very interesting to me. I would make note the close open when this opens back up next week. So at the close, it's not necessarily going to update the bands. We'll see. It's usually on the next open that it will update or shift the bands over, and most indicators will update. In this case, the upper second is at 2025, so just right into the wick high areas here, but above the closes at around 2015 bucks. I suspect that this is going to compress into that closing structure, and the lower second is right at the low, rather, and that's coming in at 1911, and the low on a close here is at 1919, so basically 1920. That is the big area to the downside, and I do suspect that that is where the lower second is going to compress into on the weekly here. But we have the upper second standard deviation and a wick into the upper second and third zone, and then a pullback to the lower first. That's where you want to see these kind of bigger time frames fall in line. You want to see that lower first hold as support. It grinds up, goes into a consolidation or starts to get into a lower volatility period. And then we can start gauging expansion below the lower first and above the upper first with relative accuracy to go test either the lows or the highs at the lower second and upper second, which of course are going to be your reversal setups as well, because they're usually going to come in. The upper and lower seconds are going to be your reversal or continuation zones, if they're, especially when they're in and around overhead resistance or at support. So if we did see closes below the lower second that breached the low, likely looking for at downside expansion on gold, and same for the upside. Closes above the close open resistance here and the upper second, we would likely see expansion and continuation to the upside. But those also act as reversal areas, right? Reject at resistance and hold support. So this is what I'm going to be watching for coming into next week. And when you take into account the Stochastic momentum oscillator, and again, this is running a 6.3, 14, 255 look back. It's 1926, and gold is currently, it's got a few hours to go, but trying to close, about 25 to 30 bucks above there. So that is something to watch this week into next. Dixie and gold. Did my stream just reset over there? It did not. Okay. You guys still seeing me over there? Yes, good. All right, so for those of you that are on YouTube, if you go ahead and hit the like button for me, that would be great. That does actually help, as it turns out. Now let's go check in on traditional markets. Okay, so Dow has pushed on back to the highs. So I don't know if I had mentioned this on, yeah, it must have on Wednesday, that it came right into the resistance area that we had picked out last week, or on Monday. It was definitely there on Monday already. So it would have been last week that we were looking at this overhead resistance at 35,515 to 35,631, and we basically see it perfectly hit that area. It is still above the upper first here, and on any pullbacks, so the upper first is coming in at 35,280 or so. This is likely to paint a doji again. If it closes like a doji, below the upper first here, it's going to go test Thursday's low, most likely at 35,216. And from there, if it does lose that area, I would be looking back to the basis at around 34,720 to the high area over here at around 34,6. That is going to be 34,464. So that particular monitor is really far away from my face, and I don't have my glasses on. So, but that would be that'd be kind of where I'm looking. So 34,720 to that's going to be 34,464. So that would be kind of the zone that I would be looking for. And quite frankly, I think the lower first might end up around this last high side structure down here, where we have this little bit of a W for winter consolidation. And, but hitting pretty major overhead resistance. Now, the big thing to watch for on Dow here would be the weekly. If it can close today above the upper second standard deviation, then it's likely going to see a test up above this overhead resistance. That would be my take on it, to be quite honest. So keep that in mind. And that is going to be coming in at 35,400. So keep an eye on that through the next 30 minutes or so. But looks pretty good. Weekly is also still pointed up above 34,920. So it's still got some juice on the momentum end of it as well. And is there anything I'm missing in that regard? For those that are in the markets, like actively trading? Okay, so no. We could see NASDAQ pushing on through on the weekly. This could go up to 16,141 and probably around 16,200 by the end of the weekly here into next week. This setup here is interesting because we had the gap up open and then fill in yesterday's candle, and that to me does mean that it needs to get above 15,800, 15,795. If it does get above there, then I would be looking for it to run, the current highs here at the upper second standard deviation around, 15,900 to maybe even just overhead there at the 15,950, 15,930 to 15,950 there at the wick highs would be the next big area, in my opinion. But if it does not regain and close, in the next 30 minutes above here at around 15,795, I would look for it to, I would be watching it coming into next week. I would be watching if it can hold the upper first standard deviation, which is currently on the daily at 15,669. Nice. So that is something to watch out for. If it did lose that area, I would look for it to come back to this consolidation low kind of a structure here. It does kind of look like it could W its way out, by the way, but that doesn't necessarily mean it will. 15,417 at the basis. It's fine still, even above the lower first as it stands right now around these highs here. And that's coming in at 15,164 to 170 is what I would take down here to the downside. Not seeing anything too crazy there, but this is fairly interesting because if it does close above 15,565, which it is trading 200 points ago, a good 200 points above, then we're going to see an initial cross back to the upside. And I do believe this would be on bullish divergence as well, yeah. So this would be another hidden bull div here. It's not going to call it out because it's calling out the last low. But, depending on how you're reading your lows in candle structure, there's many that would consider this another hidden bull div. And SPY. SPY came right back to our 252 support area, spiked it after losing it in yesterday's price action. So looks pretty good, but same thing. It's below this bear candle low at 451.55. I would expect this to come back to the basis around 448. Maybe even start gap filling around some of these areas around 445 to 442 down here at this high side structure. And you could even take an actual gap fill down here. Yeah, that would be your 442 area to the highs at around 444 or 40. Yeah, 444. Yep. So that would also be the 442 would be the lower first on the daily. Again, this is still strong. It came down and it back tested the support. So as long as it's above the 451.55 low, I would look for it to try to keep testing up. If it can get above 459.44, I'd look for it to keep riding that upper second standard deviation, 460 and beyond. Possibly even up to around that 465 area. Now, this still would be predicated on it maintaining closures above the upper first to maintain this nice strong trend, and pullbacks coming down and maintaining that basis. And at worst, depending on where the lower first is, if it is above these highs, I would take the lower first. Caution if it starts heading back towards the lower first and we see this open next week and the lower first is still below this high over here at 443 to 444. But this entire zone down to the lower first, if it is above that high area, I would be looking at as a strong indication that things are probably going to continue to hang on the highs and try higher. That's what I'm trying to say there. 456 is the momentum pivot. It is 456.01, and it is, got 22 minutes to close, and it's at 456.86. So we'll come back and check on that, see where it actually closes. All the weeklies are pretty strong as well. It's got room up to 460 on the weekly and beyond. After this weekly close, is it getting into the point where it's likely ready for a wider pullback on the dailies, maybe even the weeklies? Probably, but you can't until there's actually a structural change here. It doesn't look like it's ready to put in its high just yet. We'll see what next week holds. It is above a major resistance area overhead. I'd be looking for this thing, quite honestly, to keep on marching. That would not surprise me at all. And then, as I've said in previous videos, watch the all-time high for a possible deviation. So just keep that in mind. Okay, that is something. I know that that sounds bearish, but I'm not looking at that as bearish. When I say watch the all-time highs, if it does make it there for a deviation, meaning it might not reject right at it, might deviate above, come back in, consolidate, and then we gauge from there, because it could still keep running. There is momentum on the higher term time frames that suggests that, and I'm talking much higher term time frames. And yeah, that's gonna pretty much do it for my assessment of markets today. I will jump right back into Bitcoin here. See that it is at 29,300 currently. It's just kind of playing on the low side of 29K here. Not much interesting in between these support and resistance areas until we see something different happen. Especially you start seeing closes today above 29.5 or so, regaining those wick lows. Then eyes on those close open structure lows at 29.8 to the basis at 30K. That's the big thing to the upside. And then anything that starts to drop 29K, just watch wick low 29.8 and then go from there. I will take just a moment because I am going to shift gears, and I'm going to talk about swing fail patterns. So this is something that's been requested quite a bit. What constitutes a low, high, swing fail pattern? And I'll be honest with you, I'm going to explain this, and there's probably going to be missing pieces because you do need to understand trend and support and resistance. And I do have a series of educational videos that will be released soon. I'm waiting to hit some milestones, guys. I just don't have I don't want those videos to be put out and just die. I don't have a very large viewer base yet. I'm getting there. The channel's growing, but I am waiting to hit a few more milestones before those videos are released. So what I am going to start doing is I'm going to introduce a topic probably on Fridays. Maybe if it's something that you guys really like, I will take a look at it with each live stream towards, after the analysis. But it does take away time from me looking at coins that you want me to evaluate for you or give you my opinion on. So I'm going to take a pause though, because I'm going to see how it goes, and I might cut it out and make it a separate video just to have as its own standalone thing. So give me just 1 second here. I'm not pausing the stream. Hang out with me, bear with me. I am going to pause though for the back end stuff here. For you guys over in Parsec, this will affect you. And yeah, so ask Jimmy. Yeah, hi guys. I can see you too. Yes. My camera's on for you guys. Yeah, I don't have it on YouTube. Yeah. You got a full screen. Hey, so you guys are going to get dropped because when I do this, it's going to switch over to the recording setup. That does drop Parsec, but what will happen is you'll rejoin shortly thereafter. So don't leave because it is going to buffer, and then it should just rejoin you. Okay? Okay. All right, so I do have to do some microphone stuff here. So, guys, if you're in the chat, I see Let's Go Swing Fails. Yeah, we're going to just organize some stuff here. Hey, it's a live stream, right? But I'm going to get into some swing fail pattern stuff, and we're going to record that. I'm going to mute the microphone for just a moment here, and we're going to put on the 10-second chart. I will play you some music. We'll call it an intermission, and then we're going to get right into some swing fail stuff. I'll be right back. Okay, and we're back. All right, you guys over there in Parsec are getting the stream back, and we are recording this section. I'll edit this part out, but we're going to take a look at some swing fail patterns and have a little discussion about them. So let's get this set up the right way. Hello and welcome to Landy's Crypto Corner. And today is the kind of after stream, well, we're still streaming, but also recorded part of the session where we're going to have a discussion about a particular technical analysis topic. And in this case, the most requested one was swing fail patterns. So we're going to take a look at the daily, and we'll start here just with some real simple structure. And the swing fail pattern is a swing to the upside that fails and then begins to move to the downside, and a swing fail to the downside would be swinging to the downside and then moving to the upside. So you have your swing fail pattern, your upswing, fails, and then your downswing fails, so on and so forth. So the biggest thing to understand about swing fail patterns are they're going to occur typically around support and resistance unless it's in like a blue sky breakout. And then you are looking for swing fails that aren't, resistance based if it's in a breakout to the upside or a blue sky breakout in that case. But we could take this swing fail pattern right here at the 31K move up from the consolidation back here in March into April. And you can see that prior to the move, there was actually a swing to the downside to sweep the close open structure here at the Monday, April 3rd low side closes. And because this was a support area, what you're looking for is you can do something simple like take a horizontal ray here on TradingView. And you can say, okay, well, this was the low side structure. It did try to swing down to the actual lows as well, but this was the low side structure on a close open. It was not a low that was set just yet. In fact, the low wouldn't have been set and wasn't set until we saw a technical close above the highs here. So what makes this a swing fail is that we saw price hold up on a close open here, and then we're looking for if we get any price action that starts to close below this close open. Once this area was set as a bit of a high here on the close below this, this was a swing fail to the upside, never passed the wick high here at 29,190. Had a close open here doji on the little bit of a higher high close here, but then this candle right here on the second closed below the doji wick low at 28,223, and then started to hold up around this close open here. We did not see any closes below the close open here, and we still had room at this point all the way down to 27,230 or so. And as it wicked out and around that low side structure on a closing basis, we saw we had a nice little 3-candle low develop inside of this area. It still needed to get a breakout above that 28,471, 28,5 region, but right here we did have a low set. It was an early indication that the highs were going to get tested again, and if we did see closes above that 28,5 or so, 28,470 to 28,5, depending on your exchange, this was the indication that we were going to go test there. And if we did see closes above, that we were going to test then the actual wick highs here at around that 29,190. So this three candle structure here was the close on the 7th, which was a Friday. We had a little bit of an inverted doji here on the 8th, and then a close above that area and the close open here from the 4th to the open on the 3rd that actually set that little swing, downside swing area. Once that area was closed above, and especially that wick high from the 8th at around 28,175, then the highs get tested, initial rejection, and then next candle plows through them and the high. This would be a swing fail to the downside on the daily. And when this then moves up, what we are looking for, sorry, I was also looking at chat for the pause there. We see that it starts to, put in 3 wicks around that 30,500 to 600 area. So when looking at the structure of the candles here, we can take the 30,584 to the actual wick high here at 31K. This is the swing fail zone for a daily. And what we can see is we start getting closes higher and higher and higher, but never did close above the initial wick high there at 30,584. If we saw closes above there, that would indicate continuation on the daily. Now, we did see lower term time frame closes above there that got a lot of people excited, but then it was bearishly reclaimed and not held as support on the way back down, thus creating this big doji here on the daily on the 15th of April. We see that when looking at the candle structure here, we have the opens start to, the closes start to reverse. So we had the close up here at the 30,326 rather, and then we get a lower close at 30,393. That was I'm lying, sorry. This was 30,492, and then we had a lower close at 30,325. We saw a pretty weak doji here with a close open right around the previous close. And then the next candle starts to break down below that doji wick low. Thus, it was between the doji wick low here at $30,000 and the close opens that were the lowest close opens from the move up. So this is pretty specific. We have the wick high that's kind of defining that overhead resistance at around the deeper 30,500 area, 30,600, right? Bitcoin fails to close above it. Now we're at this this doji here on the 16th. The closest, lowest close open structure is this guy over here, where we have the close at 29,912 and the open at 29,912. So this area, when this is breached and closed below, then you start looking at this as being a top and a potential, this is already becoming a swing fail, right? And then this is looking like a high. This would be, you could take the wick lows here. You could even take that the highest wick low here at 30,231. But from a daily closing perspective, as soon as the lows on a close at 29.9 were taken out, then the next area to look towards, as well, this is now a swing fail to the upside. Next big area to look for is 29,660, where this close opens coming in. It closed below there. So the next areas to look back to is for targets is 29,190. We see that we began to wick into that area. And then we're looking down at the closes at 28,4 to 5. And then we see that it starts working its way there. And to the downside, now we look left again, and we can see this same area as it's closed below, because you take the highs and then the lows, and then you look at the closes below here, coming back up and retesting this last low, because this is now a low side structure. This was a higher low in relation to this last low here. We had, kind of a messy consolidation here, but, we had a higher low, made a higher high. Now we have a lower low below this low, find this area as resistance. Now we begin defining this particular range on this candle here, where we have our bear candle and then our bull candle. And we can see that the wick low came in at 27,133. Now we can take this area. We mark that off. We see that we do not get any closes below it. We are wicking below it though. So with the wicks below, now we're beginning to define some structure. We've got a little bit of a, you could call this a W if you got a GAN swing indicator on for the closes. But realistically, closes back above 27,282 to the doji wick high here are going to indicate that things are going to test further up. That would also be a reclaim of that 27,800 area on a closing basis. So that would start to define this area as a low and a swing fail to the downside from the daily perspective. And that happened on this candle. The next big area to get above would be this close open right here from the 20th into the 21st at 28,250. We did see it close above there. We didn't see it close above the wick high, but this is confirming the initial swing fail closes between this zone at 28,000 to 28,250 between the wick high of the doji and the close open structure here. And because it did not pass that wick low, we had a zone to the downside between the wick lows at 27,133 to the actual wick low of that doji at around 26,965. Once we saw this close come in, of course, we did see a lot of FOMC liquidity messing around here, but big wicks to the downside. Again, this wicked this bit of a higher low close open structure in this case, and wicked right into it, even getting this low over here on a close open. So it swung this close open structure. We had the higher close to the higher low close here, swung both of those, and then closed back above this wick high. Thus, things are going to test up further. Now, this gets really messy because it's a consolidation, and that's where, I'm not going to just purely tell you trade swing fails, right? Because you're defining ranges, and you can see how the range developed all the way through here. And this is all in the context of the daily and in some higher term time frame resistances and supports. So if we get rid of those drawings and we go down to something like a 4 hour, 4 hours are pretty clear when it comes to swing fails. So just as a simple example, because there's many different ways to read swing fails, as a simple example, what the we're just looking at candle structure right now, Sam, but the 200 EMA is your trend indication. I am trying to read along with you guys, but we'll get to EMAs, and it's you combine your candlestick reading and swing fail patterns is purely in my experience and opinion and education, it is a candlestick structure that you're looking for in relation to support and resistance areas, and even in blue sky breakouts. So I do want to call this out because we did see the 4 hour close above all these wick highs here. And just to note that, we saw that we had a swing fail area on the wick highs and the closes here. You could take that wick high to what's that highest close here on the 4 hour? We'll take that area at 31,267 to 31,525. Now, you might be thinking, okay, we had swing fails to the downside, never passed, this wick low on this area here. You see the little candle structure here where it's swinging to the downside. Once it closes back above, we'll just take this move up. Once we see this swing fail, this area here, so we see the wicks into this high zone where the high was put in at the closes to the wick high. This area swing fails. Then we get the swing fail to the downside here. And just taking purely this candle structure right here, once this moved down and started going sideways, this open at 9, this would be 9 a.m. Pacific Standard Time on the 12th of July. That open was at 30,516. That was the area that needed to be closed above for me to go look at this as retesting this high, this swing high zone over here, these two areas overhead. It would need to, of course, regain this close open structure, these close open structures down here that it was wicking off of, but getting above this open here would solidify this as a low. It did that on the candle at around 1. And yeah, that was 1 p.m. So 9 a.m. open, 1 p.m. close. Set this as a low. That then has us going to look for this area here. So what am I reading? I'm reading the opens here. We never passed the wick low on a close. We didn't even test that area. And then I'm looking at the opens here. So we have our swing fail zone to the downside, anywhere below 30,200. Yes, that was also confluent with some of the wicks from this big doji over here. You know, I'd be looking down to the next area at 30,120 to 29,945 at this wick low back here, right? But because it closed that on a low, we look for it to go into the next big swing fail area, which is this high up here, after passing this guy. So we have this swing fail structure that we already saw a swing at, but we have a higher low than this low over here. So let's go test this area. We see that it did, it passed it, and then we watch, does it get past this wick high now, this new wick high at 31.2. It comes back, it retests this previous high, then moves up and moves right through this close to the wick high of this really nasty doji, to be quite honest. That was the FOMC day, wasn't it? I think it was. I don't actually remember. Maybe not. I don't actually remember, to be quite honest. I'd have to go look at the daily again. But this is where we were headed into major overhead resistance. This is a 31.8 on my normal chart. You know, it's marked as the daily, weekly, monthly support resistance level. And that's the chart that I show you guys in the Bitcoin in 60 seconds videos. And that area was big overhead resistance on higher term time frames. You have daily closes up there. You had a weekly swing and close open structure on the monthly. So in this case, we swung into that area. But just looking at these candles alone, it had a chance as long as it was above the open of the candle that put in the high. We also know that it was a swing fail. If it doesn't pass that high at 31,862 on a close, it's not going to push any higher. We didn't see that. It was trying to hold on to this high side structure. It got under it, found it as resistance, and once it closed below 30,920 at that open, that's a bearish reclaim of these previous swings. You could take the wick highs. You could see where it was holding support. So you have a zone to the downside for the swing fail to the upside. You know that it's probably going to, 3 candle swing fail. We saw the wick come so low on the second candle here that you could take that wick low. It was right into a support zone of these highs. It did close above this guy here. So any closes below this close here, likely going to swing. Its swing is done to the upside for now. But to be, sure of this move from a structural point of view, as soon as it passed this wick low, and that is going to be at $31,040 to this close open area, or this this open of the candle that put in the high at the 30,925. That area is solidifying this area as a high and a swing fail to the upside, and then we look for the next downside areas. Obviously, closing below this area is already in a bearish reclaim of these highs over here. That was the next area that you're looking for at these highs, down to the next area, which is coming in at 30,000, 400 to 500, and then the lows. And we saw that it did try to bounce at the lows at around $30,000. It consolidated and put in a swing fail from this wick high right here, and then headed down some more. So this area here is a swing fail. We have the doji wick here from the downtrend after it tried to put in a low. It consolidated underneath that wick on a close. Then it started to lose the downside wicks here of that low at 29,920, and then down she goes. So it gets complicated with swing fails. It's really easy to pick out swing fails when something is trending hard in a particular direction. It's a lot more muddy. Like Bitcoin and a lot of altcoins are painting really difficult charts right now. When you're when you're doing pure candlestick reading. So let me look over in the chats here and see what you guys are talking about. So if fails, if an upswing fails and the low fails, safe to assume in the middle of the second, they're both in support and resistance area. So you take horizontal support and resistance within trend. So when you're looking at potential swing fail areas before price gets there, for instance, we can look at price, here. We see a swing fail to the upside here, right at the lows on the 4 hour. So you just look left, and the most recent price action is going to be the most relevant. So in this case, when you're looking at support and resistance here, 29,525, which is, it's a daily support level as well. So if you already have these things mapped out, then it's pretty easy to identify them on lower term timeframes. So you would already have them there basically. And you can see that this 29.5 area was a rejective area here. But in the candlestick pattern that we see a swing to the downside, right? And we see that the last wick low came in at that 28,850. Now, as soon as the open of that candle gets taken out on a close, we're likely going to go test the next upside area above there. And that's going to be these candle structures here. So we've got the closes here. You could even take, there's kind of an order block there that's a little bit lower than the low over here. That's not a low. This is not a low. This is just an order block. I'm just pointing out that you could take the order block. But we can look here, and you can take the lowest low and that order block. They're in the same area, around 29,700. It's 29,722, but generally speaking, 29,700, nice even number. You can see that after this open was taken out, so we can mark this open. We'll put it in a different color for right now. We'll make it this reddish color. We see that there's been no closes. After we get the bear candles, this candle pulls up above this last low side candle as well right here. So this is telling you that this is starting to slow down. So the initial dump off candle that hit the low at 28,973, the next candle wicked under it but closed inside of that candle. That's technically the beginning of a swing fail pattern. On the 4 hour here, this is most definitely swing fails on those lower term timeframes, right? So you just go down the timeframes and you can find the swing fail pattern that produced this close on the 4 hour inside of this wick here at 28,973. So you do have this bit of an area here to the downside on the wicks, but I prefer, once you see the first green candle, that's when you start paying attention. So you take the lowest wick, we see the first green closure next to it, and once we see this close open area above it get taken out, we're looking for price to rise. So, and that would be on a close, and we're looking, and it's relevant because it's relevant to this time frame. We might have 15-minute closures above it, but unless we see the 4 hour close above it, I'm not necessarily looking for further upside into the next area for a setup, right? In this case, a bearish setup, so a bearish retest of the lows. And we see that, it kind of screws around, gets a bunch of wicks above that close open structure there. And then finally it gets one green candle above it on a close, and then it begins to push higher, right? So that candle closed at 29,320 or so. That was above this close open. Now we can start targeting those wick highs again, which you can see the next candle close like right at the wick high at around 29.4. And when it starts closing up there, the next big area to look at is the overhead resistance at 29.5 to 29.7 or so. We see a big wick into it. We did not close back below or produce a swing fail inside of this area here. Instead, it continues to push its closes higher and swing that area at 29.5 again. And then that then produces a smaller swing fail pattern in this area where we have this little order block candle here, which I'm not going to discuss order blocks, but I am calling it out for those that do understand what order blocks are. This would be your bearish order block candle right here. If it does not find support in that area, and it loses, the wick low of this candle here, never passes this high, and begins to reverse and specifically close below this structure here at around 29, I think that's 29,350 or so, that we're looking for further downside back into this low side structure for a retest. We're seeing that stuff again on the other side of this. We get close lower. We start getting into the support zone down here. Tries up. It needs to pass this for this low that it's trying to set here. It needs to get past the close open slightly above the red line here that's coming in at that open was at 29,284. It rejects and fails, comes back down, but it does not pass the wick low area on a close. It even hangs on to the wick low of that first downside, stopping candle or your bull candle after the bear candle. Now we're defining this smaller range. This bear candle stops there, bull candle. So now we just need to take out this little lower high here on a closing basis. This becomes a swing fail to the downside that's going to try higher. So this little high here at 29,245 to 250. Once that gets closed above, then we're going to test further up into this high side structure. And it did, tested right into 29,525. And now we're seeing the same thing on the other side. So if we start seeing closes below this wick low at around 29,190, which is right around the open of the bull candle, then we're looking back down to the range. That's a swing fail into overhead resistance. And then we're looking right back to the bottom side here and maybe lower. That's where on my Bitcoin in 60 seconds videos, I say, any price action below 29K, look for a swing of the 28.8 area at the lower second standard deviation that comes back and reclaims specifically around that 29.4 to 5 area. Otherwise, I'd be looking down to 28.4 to 6 and 28K at the weekly. So I hope that kind of clears some things up. I want to get your feedback because I want to know where I deal with a lot of people that have a lot of knowledge of this already, and this is a refresher for them, and or come from a different system where they don't quite do swing fails in the same way. So I do want your feedback, whether it's, for those of you that know me personally, send me your feedback. For those of you that do not, hit me up on Twitter in a DM. It's in the description. You can find my Twitter profile. That's the preferred way to do it. And then, of course, when I get into getting the Discord up and running, it, of course, will be free for you guys. And I will, just have a little bit more setup to go, and we should have it live, but it will be free and available for you guys to hit me up at, and of course talk amongst yourselves. Now, I do need to kind of get a baseline where I'm getting a lot of newer viewers of my content, kind of where everybody is, because a lot of the people that I was, talking to prior have pretty extensive trading experience. And I do know that there are some of you that have some of you are new, and it'd be good. Maybe you guys can give me suggestions. Maybe I should put out a survey, or and then have you guys do a survey so that I can kind of get the lay of the land. Now, I will have a basics or beginners course, like I said prior, that goes through and teaches you the basics of almost said something bad there. The basis of technical analysis, even. The basis of testicle analysis. There we go. But yeah, I hope that was fairly straightforward, especially looking at current price action. You can see the swing fails to the downside, the upside at the resistance, and then another swing fail to the downside, and possibly a swing fail to the upside. Now, I will say that the 4-hour is turning on Stoke here, momentum. And again, for those of you that don't have this particular indicator, I would first, if you have the funds and you do like Crown's stuff, I'm a huge fan of their advanced Stoke over there at app.crowntrading.net. KVDB made this one. It's got the pivots, it's got DMI, it's got ADX, it's got all the bells and whistles. Very, very cool indicator. Go ahead and support them if you can. I don't get paid. I don't have an affiliate link, nothing like that. I just am a big fan of his developers over there and of Crown. He's just a great guy. But there is a reverse Stoke that is free that also has the pivot. And then you can find this in TradingView. It's the BA reverse Stoke panel. And I don't quite remember who made this one. BA reverse. This is by Trader Hali. So go ahead and check that one out. I'm sorry, I'm also reading over here. The 4-hour pivot is pivoted up. So I see Ivan, Spin, Sam. Thank you, Sam. I do appreciate it. And the 200 EMA. I'm a big fan of the 200 EMA and 200 SMA on the same chart, Sam. I ended the recording, guys. It doesn't, for whatever, for you guys over in Parsec, it doesn't, when I end the recording, it doesn't knock you out. It's only when I start for some reason. Yeah, we'll see if I'll post it or not. I mean, people can also scrub through this video. YouTube's weird about having too many videos posted in the same day. Yes, so let me look here. Sam, I'm a big fan of the EMAs. I'm a really big fan. So if you are using the Landy bands or any other indicator that has moving averages in it, one of my favorite setups for exhaustion of momentum along with my bands, right? Obviously the bands are the main focus, but if you're going to use EMA, so trend identifiers like EMAs or MAs, I like to throw on the 200s, that being the 200 EMA and SMA. And when I see the SMAs, so, you know, you got your uptrends generally above you're looking for a strong uptrend above your 200 EMA. It's bullish, bearish below it. Well, when you see the EMA cross under, or you could say the SMA cross over the 200 EMA, that's usually an indication that you're seeing a shift in momentum, which obviously this is telling you this right here in the consolidation, and then getting below the lower second, standard deviations on the Bollinger Band and so on. But if you use EMAs for trend, you can see that this is pretty straightforward in that you have the cross here that kind of flips things bearish, and, you know, because you often will see that, oh, hey, we're holding the 200 EMA right here, but the 200 SMA swept over price action here and then was found as resistance, and then we find both as resistance now. So yeah, you can use moving averages. I love moving averages. I use a very common one that was taught to me in industry, that actually Crown uses and I've also picked up a bit of the EMAs that he's used over the years. As he's a guy who trades very much in the way that I do. In the early days, he was um, when he first started his like YouTube and his community and stuff. Uh, there was a lot of things that I found in common with his trading style with mine, and then of course he started getting developers on board, and they were doing really cool stuff. So when they were setting up their EMAs, like he's got what he calls the Crown Cross, is 921 cross, and so 9 EMAs, either using 8 or a 9, 21 and 20, and then 50 and 55. But I have a bit of a different setup. I like to mix the EMAs with the SMAs, as they give me early indications of when things might fail, like this bounce off of the 200 EMA, right into the 200 SMA and failed. Early Crown was a bit insane. It was pretty raucous, man. Like there was some. I don't even know if some of those old streams are up. I'm surprised that. I'll be honest. I'm surprised that some of them even were stayed up as long as they did. And if they're still up, I'd be shocked. But yeah, he and he's just a good dude. All around good dude, and he has good people around him. But yeah. So I appreciate that, Sam. Hope that helps also. Something, one of the sentences I said, most likely I was chewing on my words there. Ivan says, almost gave me a stroke. Change your bio. On Twitter. Hi, Don. Yeah, his language was wow, Spin. But us as a community, we were, look, man, if you go into like a prop shop, dude, it sounds like everybody there sounds like a freaking sailor. And nothing is held back. It does not, man. HR, the way HR is these days, they walk into any kind of a prop shop on like, go to the desks, or if they're on the floor of like a larger institution or something, man, they'd fire everyone. They'd try to fire everyone. Don, sorry, joined 5 minutes ago. Need to watch after you finish. I did cover Dixie. So I followed up from where we were talking about it because it hit my upside target at 102. So I did cover Dixie, Don. Glad to see you're here, buddy. And Spin says Crown's trading app's pretty cool. Yeah, he's got a good one. I mean, it's I know he's doing things a bit different these days. I think everything is a monthly instead of like a one-time payment. And they've been building a lot of stuff. I haven't really checked it out. He's got a cool app. I've been a big fan of his developers over there, and the app always getting updates and being worked on. So very cool stuff. I have no problem recommending even professionals go over and check his stuff out. Another guy who's got a really cool platform as well, and has worked a long time, is MDX. I think he's changed his name. I think it's MDX Algo now. He does a lot of really good stuff too. Not quite as big as Crown. I think he's getting there though. Got a really good platform that he's built as well. Used it for a little while, just supporting him when he was first getting that rolling out. Yeah, a great community over there too, especially their Telegram community. I think Farmer is still one of their mods. He's a really good dude. Good traders too. There's some really good traders over there. But yeah. All right, guys. I think unless I will open this up for a few questions, I'm not going to take requests today for alts. I will jump back on Monday and I will do some alt requests. So think about the coins you'd like me to check out for you. And I'll try to cover them to the best of my ability on Mondays, and then of course Wednesdays. So I'm going to do a Monday, Wednesday, Friday, probably around the same time that I started today. It is a little bit variable. I do have another set of people who can't. They're blocked from like using YouTube. So I do speak with them. They work in industry. They're really good guys. But they won't be chatting in the YouTubes with you guys. Yes, yes, I'm saying you're good guys over there. So saw somebody shake their head no over there when I said they're good guys. Ivan, me like, what the heck are these people? What do they say? Being new to this space. Ivan, look, man, it's like riding a bike. You just got to get on and pedal, and you begin to learn it. You also begin to learn what to avoid. Those are like, don't run your bike off into the trees or the woods, and don't ride it into the middle of the street. And that's the same in the space, man. You're gonna find a lot of influencers, crypto influencers, and you gotta kind of learn from who they are of your own accord, right? You end up finding a lot of people that are more mainstream, that maybe have not so good intentions for their community or use them in different ways for liquidity. And then you've got like the real, if you found me, Ivan, you found probably the more hardcore trading side of things. I do keep things fairly toned down, Bitcoin in 60 seconds for you guys. So, when I'm going through the Bitcoin in 60 seconds videos, like there's a lot of analysis, a lot more analysis that goes into that than just looking at the candlestick patterns and the bands and the volatility. There's higher time frame analysis. There's there's momentum analysis. There's divergence analysis that goes into it. But your main keys, Ivan, are going to be trend, support and resistance, volatility, and momentum. Those are your 4 keys to trading. I have a video where I'm literally going to be talking about those 4 key areas. Those are your keys to success in trading. You don't need a million fancy indicators. You don't need all kinds of bells and whistles. As long as you understand trend, support, and resistance, volatility and momentum. Now, why do I say momentum last? Because trend, support, and resistance and volatility define momentum, right? They define, it's going to define your closes within trend. Volatility is going to define your closes within trend in relation to support and resistance. So once you get a good understanding of that, then it's just, you look at your chart, you check these things, you look for the key areas that you need to be aware of for, whatever kind of a trading plan you have set up for yourself. And then you go from there. It's trading is mostly psychology after that. So, but you don't need a lot of fancy stuff. I have a lot of fancy stuff. That's because I get bored. There's a lot of time staring at candles. You're like, is there a different way that I could look at this? So it's just getting bored looking at all these candles. So I end up back testing indicators for like 2 or 3 years with my friends. They would just like post indicators, and we would go through and just back test them, and then they end up on my chart like, hey, I just bought this indicator because it looked like you get some disposable income. Now it's like, hey, I want to reinvest into this thing. Let's go support this guy over here. He's a friend. Or I really like these people over here. Let's go support them. But when you're first starting out, you just need to trade. You need to understand the basics, and you need to trade with a trading plan and understand good risk management. And then you're pretty much set. As for like the people in the space and like who's who, and you're going to hear probably from me a very specific point of view. Most crypto influencers are scammers, in my opinion. Most crypto influencers do not actually trade. And from somebody who has a lot of experience, I can tell you that, it's easy to pick out who trades and who doesn't. Anybody that gives you their take on direction but no invalidation typically is like a clear cut standout. Like if they just say it's down only or up only, and they're giving you all these fancy ass charts that they've drawn up, and they do not provide any kind of invalidation, they're probably, you know, they maybe they just missed it, but typically if they're a larger account, they're going to get asked, and if they don't provide that information, it's because their directional bias is that of someone who does not trade actively, and or they're in a massive loss. So they need it to go in that direction. And then many just end up in the shitcoin shilling game, and that's just not something you want to end up wrapped up in yourself. But not gonna name names. There's also really really good people in the space. I think that I'm a good guy. I'm not gonna go out there. I do this for free. I'm gonna put training and educational materials out there for free as well. Indicators free. But there's also good guys. MDX, good guy, good platform, good team. You got Crown, one of the best in the biz, I think. You got the Pizzino brothers for different reasons. But Jason and Michael Pizzino, very good. Of course, everybody offers their own platform and their own indicators, and that's the game. But yeah, you can ask. Go ahead. So Spin says, stay around. Thank you for your time and detailed information. You're welcome, buddy. Let's see. Mitch Ray's a good dude. I'm not because his trading style, like the guys over at Cheeky Crypto are good dudes too, but because their trading style is not something that interests me, I don't tend to spend a lot of time looking at their stuff. But I'm aware, like I'm subscribed, Mitch Ray, Cheeky Crypto guys, like they're actually good people. I've actually had like good conversations with them, some even in person. So that was a while ago now, actually. Not Mitch, but the guys over at Cheeky. But yeah, there's you end up meeting a lot of these people in at crypto meetups, especially in the early days, when it was a smaller group, and some of the personalities started to really develop out of those groups. It's pretty interesting. But yeah, there's, the type of analysis that they do is so different than mine that it's not really something that I actively seek out. But I do like when we have confluence. Hey Sam, thanks for hanging out, buddy. You have a great weekend. Yeah, I will see you Monday as well, sir. Appreciate you hanging out. But yeah. So Ivan asks, do I DCA into BTC and ETH or alts? He's thinking like different coins. Look, I don't know, bud. That is purely based on how much money you have, what your time horizon is, and what your risk tolerance is. Like, you're gonna find people who are telling you that the bull run's on, and they might be right. Maybe the bottom's in, right? I call what Bitcoin is currently in is a major low, not a macro low yet, until we see specific criteria. Like the lows at 35K, 37.5, 38 area get taken out, and then specifically that $48,000 high, lower high on the monthly. Then I'm all for bull run back on. But we would need to see a macro low put in. and that macro low is only put in by making higher highs and or making a higher low. So the previous lower low on the monthly, for instance, for Bitcoin, there we go. This lower low here is only going to be considered in my view as a macro low once there is a higher low and then a higher high, or there's a higher high and then higher low, if that makes sense. Well, I can't give you specific advice, bud, but what I will tell you is that if you know the areas, if you understand the chart and what you're looking at, and you have identified areas that you are comfortable accumulating in, then that's what you do, because that's your plan, right? And if they go significantly lower than those areas, so you have to have worst case scenarios, right? But if you are buying and holding for the next bull run, keep in mind that things are pretty far up off their lows, so they could retrace quite a bit still, even from here, even as bullish as some may look. But in this case, like Bitcoin doesn't have a macro low in yet, which still leaves the door open for it, putting in a higher low around these areas, because I highly doubt that we're going to see it put in a higher high than the most recent high, which is 48K. From here, I could be wrong, right? And if we were to see a higher high than 48K or the all-time highs, and then it puts in a higher low, then this is a macro low. And I would not be looking for it to get violated. But as long as, and even if we put in like a monthly high here, come down, put in a higher low, then this would be the high area to break. The higher low is what you need to see. Lower low, equal lows are also acceptable, as long as, it doesn't dive too deep. It would need to take out this most recent high then, right? But we would need to see an actual high put in. I don't see an actual high put in just yet. You might be getting some people saying that this is an actual high. Oh, no, it's the highs put in. We put in the higher high. We had the pullback, and then we had a higher high, but it didn't close above the wick, so it's not a higher high. Right now, it's got to beat out 48K or put in a lower high and then a higher low to solidify this major low as a macro low. And there's specific criteria. I've gone over that in a few of the videos. Now we'll go over it again on Monday. But I personally, I'm never going to give you financial advice, but what I will tell you is if you're comfortable putting money into the market and you're comfortable that it could have a very large drawdown of 50% or more, even from here, then, and you understand what your time horizon is, then yeah, I mean, look, there's stuff that I'm accumulating, right? And I have been accumulating since the lows. But, it's not, I'm always accumulating Bitcoin, but I did the most of my accumulation on that major low. And then anything below 20K was major accumulation. The rest I'm trading inverse for more Bitcoin. All of my swing positions are inverse Bitcoin positions. So, or depending on your exchange, might be Coin M. So trading for more Bitcoin, because I'm in full on accumulation mode. I'm not, especially with Bitcoin. Bitcoin's like, we'll get into it some other day, but I'm what you might call a Bitcoin maxi. I'm not actually a Bitcoin maxi, but I'd probably be accused of being one. But there's alts that I've accumulated. Like I was accumulating XRP. I made a video about it like months ago and said like, hey, 56 to 58 cents. Gets above there, it's going to rip. It did. Now, I was accumulating for quite a while with XRP. And when it ripped through there, I let some of that bag go. I took profit. So always remember to take profit. Um, and that's okay, even if it runs to $1 million. I don't really care. I'm paying myself for the time. So remember that part too. But and then ETH, like I said earlier, I mean ETH looks like it wants to try to put in a low where it's at, but that's not a guarantee. Don says manual trading is the best. I can answer that right away. Unless you have a bot that's executing something that you planned, that you is part of like a trading plan setup. For instance, at some point, I will have my indicator linked to exchanges and allow, there's going to be a strategy and backtest function that will, that you can have it, put in expansion trades or something. That is the goal at some point. So, and then you can modify the criteria, where your stops would go, which band does it need to break, which BBWP level does it need to be for a bit of automated trading. But in general, I would say no. They're not the best unless you understand the trading system that the bot is programmed for and it meets your trading plan requirements. I need to see trend in this direction above these MAs, maybe above this volatility band on the Bollinger Bands with BBWP increasing and Stoke up, and those are my options. And it only enters trades there and puts stops here and it takes profit here. That's something that you would be defining based on a plan that you understand very well, and that's what I would suggest. That's the only time that you want to use bots. I personally, I don't. And even if I create one for myself, I'm going to be manually trading. It's not going to, the bot will not be handling the majority of my funds, that's for sure. I know that there's grid trading bots and there's all kinds of different exchange bots and copy bots. And, and it's just like, you got to learn to trade yourself. Because if you can't trade yourself, you're not going to be able to understand how to get the best out of a bot anyway. So manual trading is where it's at. And then once you're comfortable and you've developed your own system and habits, you understand what it is that you like to see for setups, then you do that. You take those trades based on that, and just incorporate it into a bot that automates a good deal of that for you. Don said, very, very good advice. I would say it's just time to accumulate now until the halving. Take money you can afford to lose. Do not need over the next 2 to 3 years and buy as much as you can. I would generally, not financial advice. I'm just reading a comment on the internet by somebody that has no last name. But I will, oh God, spin, that's funny. But I will say that I generally agree with that comment, not financial advice. Look, trading, you will accumulate knowledge very quickly when you're actively trading. The most knowledge that you'll accumulate is on your losses, not your wins, by the way. When I first started trading, and I had a very successful early career in trading, and I still completely blew up an account. And it wasn't my technical analysis. It was my hubris. It was my mental state and the psychology behind it. I was ignoring what my chart was telling me. So, most of trading is a mental game. And you're going to run across any experienced trader, by the way. There's any experienced trader you run across, they've blown up something. Whether it was at an institutional level or personal account, they blew something up. Absolutely. So, now that doesn't, and it's, yes, it's to turn the leverage down, guys. That's the big thing. Turn the damn leverage down. I might get in and do a trading series. It's just a lot of work, man. I can't commit to this, but at some point when I do have the time, I might get in and do a trading series where it's like take $1,000 on 3x and just show you easy setups and trades. Not that you're trading copy trading, but like, hey, this is how you can grow. 1,000, because you got $3,000, you should be able to make a couple $100 a week, and on 3x leverage. Like, it's not as difficult as people. Everybody's looking for the big shot, so they lever up. Let's go in this direction. They're already calculating how much money they can make, and then they get liquidated because you end up seeing what you want to see. But when you lower leverage, it allows you to adjust if you are newer and you are not correct, where you can save yourself from going into a deeper loss. Your stop losses get hit. If you're not using stop losses, which I do not recommend, you should use a stop loss all the time, and learn how to manage them. That's part of risk management. But many people don't, and they get liquidated out like in a tight trading range because they're betting on direction, on reversals, and they're already calculating how much money they're going to make in many cases, and then they get taken out of position. It still happens even when you have a stop loss in, but when you have lower leverage, you're losing less. And it does give you if your idea is still valid, it gives you room to build a trade too. There's a few different ways of trading like that. You can scalp, you can build swing positions. If I'm very confident about a direction that something is going to go, I will build a swing position. A long swing position as price is falling, and it has not indicated that it is going to reverse yet. But I also have the major levels that I want to see getting tagged. So your major support resistance areas. You can use EMAs, MAs, whatever happens. So Spin just brought something up. Good. I'm glad you brought this up, Spin, because this is a common problem even amongst experienced traders. So I'm going to venture to say that you have been around a while, but you're not as experienced. I want to say you've been around it for a while, but you're maybe, you understand the basics. You got that down, but in terms of actually trading and executing, you might have not as much experience. The reason why I say that, and you can tell me if I'm right or wrong, but the reason why I say that is because if you find yourself early or late to a move, it's typically because you're not paying attention to volatility, because volatility can take things and drive them right through all of your divergences, all of your momentum indicators, everything. That's volatility. That's where trend, support and resistance, and volatility are the drivers of all of those other things that you're probably checking on. Because when you see the divergences or you see the momentum beginning to turn on your oscillator of choice, and you're like, that's the move. I'm going to get that I'm going to get in on that wick low or that wick high, and I'm going to get short here or long here. And volatility carries it right past those areas or turns it into more of a question mark, begins consolidating or doing something else. And then you're like, oh, I'm still confident in the direction. You realize that maybe it goes into a consolidation and then expands against you. That's where volatility metrics help you become much more patient. And that was one of the early keys to my trading was volatility. Now, Bollinger Bands are a great representation of volatility. Not everybody's a big fan of them, but whatever you do, you need a volatility metric. And that is what is your saving grace. If you see something is still expanding, you got to learn the volatility metric. But if you see that we're still getting expansion, A lot of people were betting on Bitcoin, for instance, when it hit the high here at 31,500. They were betting on this thing reversing. But volatility said, hell no. Passed there, went into a consolidation. And because it never passed that doji wick low over there, by the way, at 29,539, 29.5 doji wick low, it just went sideways and consolidated until it finally broke down. But it went into a consolidation, and then it expanded up and took all those shorts that were holding swing shorts, hoping that it was going to go down. They're holding, they're paying, they're getting paid because it was funding was in, it was long pay short, so they're getting paid here to hold this position open, and it's going to tank, and then it goes and it sweeps them at 31.8 at the overhead resistance. But volatility told you between the volatility metric and the bands and the momentum and the swing fail areas, support and resistance, that you just, they're holding this shit for, I know that people were holding this shit. I watched people go short all over the place. I watched the books. I watched OI go up and sit there. And it wasn't just longs. Longs are taking profits. Longs took profits all through this area because they're front running the 31.8 support, or resistance rather, overhead, and buying off the 29.5 to 30K support area. Literally, this doji from the way up defined the entire bottom side of the range, and once it was lost, obviously now we're headed down. And you've got everybody that was longing and shorting the breakdown down here, and it's just bounced on support. It's like you're at a lower second standard deviation. If you study Bollinger Bands, you know that this is either a reversal or continuation, and it's just wicking off and hitting the basis. It's just taking out all the shorts, taking out all the longs, just chopping the shit out of people. And then it gets under the support. Everybody's shorting the breakdown, and it comes back and it tags everybody 3-4 times. This is very much expected price action because we're not seeing the things that we would need to see, and we can still get brilliant trades in here. I've been trading this whole choppiness on the way down on the 15-minute and under, but I use the daily as my base. I look at the 12-hour. Where's that at? Where's the 8-hour at? Where's the 6-hour at? And then the 4-hour and under are my time frames. And then I'll dive down in. I'll position, on the minute to 3-minute chart based on what I'm seeing on the 4-hour and under. If the 4-hour is showing the setup, and then, for instance, the 4-hour showed the setup that this was going to turn above, I think it was like 29,200 or something at the time, and it's going to remain above there, above 29,234. It's around the same area still, but it showed that momentum was going to turn around that area. And then under, the 3-hour momentum was going to turn, and I'm looking at structure, but I'm pointing out at momentum because it's one of the first things I look for. Is just, it's a quick look at the closes, because I'm using a regular Stoke, not a Stoke RSI. And a regular Stoke is measuring close over close momentum. So are the closes getting lower or higher? Are we in an extreme or are we not? We were at the edge of the oversold on the 4-hour. It got a little bit in there, dipped its toes on the 3-hour, but started to turn. And then having the pivot there is really helpful. When he released the KVDB stuff, it was really cool over there on Crown's channel and on his app. There's been Stoke pivots before, and you could find them. They were all on chart. This guy just happened to say, I want a panel, and he basically made the KVDB Stoke without a lot of the extras that you get. But, this was 29.2. It's the hourly is where it's down below 29.4. So you got a range. We start seeing 29.2 break down. Probably going to be headed down to 29K, 28.8, swing that low, see what happens. If we see things get above the 29.4, that's still above those pivots on the 4-hour through the hourly that I just looked at. So that's going to give me the indication that we're probably going to test around the highs that we were just putting in, around that 29.5 to 29.7 area. If we start seeing daily closes above there, then I'd be looking for that close open structure at 29.8 to 30K to get hit. And then just kind of go from there. Hi, Baba. You're making it right at the end of the stream, sir. I'm just having chats with people now. To just kind of recap, when you do watch this back, I went through Bitcoin analysis today, obviously. We looked at Dixie, gold, traditional markets. I talked about swing fail patterns, and now it's just kind of a little bit of a Q&A and interact with you guys here. I appreciate it, Ivan. And for you guys that do join in on the YouTube side of things, I got some questions over here from you guys. And I see that you guys are done with lunch. Yeah, I know you were done with lunch a while ago. It's almost 2 out here in the West Coast. So, yeah. You guys can bump out of here. I'm going to just talk with the guys over here on YouTube for a little bit longer, and then I'm going to wrap the stream anyway, and then I'll call you. Tell Jimmy that I said hi. I will call you guys later. And yeah, so. But for you guys over here on YouTube, yeah, there's a lot that we covered. So I'm just doing a little Q&A right now, buddy. So, yeah, we covered a few things. Didn't get into a lot of alts. I did look at ETH today, though, as well. So, Bitcoin, ETH, Dixie, gold, some traditional markets. And my assessment is, by the way, just to kind of wrap my thoughts on traditional markets, I do think that they could very easily put in highs where they're at on the daily, but the weeklies still look strong. Monthlies still look strong. I didn't look at the monthlies with you guys today, but we will follow up on Monday and obviously the monthly close. So, and 2-month close, right? There's a 2-month close coming in. Yeah. No, there is not a 2-month close coming in. What am I thinking about? Yeah, because no, 2-month is be September. No, it's just a monthly close. I was getting ahead of myself, as were you, sir. But yeah, getting a little excited for the 2-month, huh? Me too. I got all excited there for a second. 2-month close, what? 25,840 is the pivot on the 2-month, by the way. So something to watch in August, by the way. Maybe if I say by the way a few more times, we'll get there. For those of you guys that are on YouTube, though, if you could help me out, when I do post Bitcoin in 60 seconds videos, you can leave a comment and a like. It really does help those videos. YouTube has changed the way that they push those videos out a little bit to new audiences. So I do need a little bit of help from you guys on that. With some likes, comments. Doesn't have to be anything more than what's relevant to that day's stuff. Likes are the thing that really help, but comments also help. They're one of the, between those two things, they're the biggest drivers for a video when it's posted. I was doing really good numbers on those videos. Now TikTok does great numbers, and YouTube's like takes forever to even get to 100 views. When that was kind of the floor when the videos first were released. So it's not necessarily showing it to new audiences. And in some cases, that's the biggest thing you can do to help for the video side of things. Because, look, the milestones that I have are going to be based on YouTube. So I am trying to get this past 500. That's one goal. We'll start getting some cool stuff put together video-wise there that's going to be out at around and after the 500 mark. And let's see. I'm also reading. Sorry. Lost my train of thought. What was I talking about? Something about after the 500 mark, and then it's 1,000 to get YouTube monetization and other things like that. But yeah, it's been really odd on YouTube. I think they've kind of switched things around. No, Ivan, it helps. It helps. Now, the way that so for you guys that are regulars here that maybe don't know me personally or have only had interacted with me here on YouTube, the way that most algorithms work on YouTube, Twitter, Twitter made their algorithm open source, so you can go and dig through the APIs and the API calls and like kind of how the algorithm fits your and delivers your posts to new audiences. But usually it's views. So views are the first thing, but what really it's like views are on Twitter work kind of the way they do on YouTube. But they views are the base metric, right? So more views, it's gonna generally show it to more people, but it like tests it with an audience, and then it's gauging interaction. And interaction is on likes and comments, and it's the same. It's basically the same thing on Twitter, so it always helps. Likes on Twitter, it's follows, likes, retweets, generally interaction as well. When you have a bigger account, just talking back and forth usually gets, depending on their size and amount of followers, usually gets that kind of rises or bubbles to the top of other people's feeds as well. Talking about copy trading. Landy, I hope you 1G challenge. So, I mean, I've done this a few times, Spin, where I have taken and shown people specifically that you could take $1,000 on 3x leverage and you can make a couple $100 a week. Usually, like the last one that I did, I was proving a point to somebody that it can be done. You can lower your leverage and stop getting wrecked. And so I think I was using Litecoin as the example. And I took $1,000 in the trading account and just showed that $1,000 on 3x, so you could see that it was 3x was the position, 3x $1,000, $3,000 was the position size, and that consistently getting trades in, and just showing like this can be done. Look, you can make. Here's $100. Here's $150. Here's $200. Here, this one went really far. It went to $300. Like, it's not. It's and that adds up. I mean, you do that consistently. Setup to setup. You're working at it. Every day of the week, you're gonna get $200, $300, $400. Before you know it, you have a bigger account that you can trade with on that same 3x, and the trades will naturally get bigger. So but yeah, there's going to be no way to actually copy any trades. Should I do so? It's a lot of work, dude. Like I already traded. I did it because I was kind of irritated with the person because they were like, no, I have to, I'll never make it. It's like, no, you're going to make it. Just lower the leverage. What's going to make you not make it Just freaking using 30, 40, 50, 100x leverage and wrecking yourself every freaking time and having to redeposit money. So you take your gains, and before you know it, that $1,000 is $1,500. So now you got on 3x, you got $4,500 to play with, right? And then, you know, it's $2,000. Now you got $6,000 to play with, and so on and so forth. So it's exponential. Your growth ends up being exponential. I saw concurrent views drop off the map. Everybody was like, fuck this guy. Oh, I just swore. My first swear word. Sorry, YouTube. Yeah, just so you guys know, Landy's personality kind of cuts both ways. I'm a very nice guy, but I'm very, very strong-headed, and I like to swear a lot. Gains are gains. I was doing $250, 150x, but I only do it with a 5-minute chart. I get my money. You're crazy, bro. That's degen trading. I mean, if as long as you are making money, you do what works, but not what I would advise. Well, I've been known, and you might hear this from some of the guys that have been on here forever, that, you know, before, what some of you guys are maybe don't know is I've had this channel for a while, and then I had a channel before it. And at one point I did have very large followings. There's a very specific reason, personal, that I won't get into for why I killed off my social medias. But when I restarted this particular channel, it was just me and a group of friends, and then they brought in their friends and so on and so forth. So it just kind of grew, but every video was unlisted and every video was a live stream. And I got known for going on what they called Landy rants. They would purposely go out of their way to pick a subject that they knew pissed me off. And then they would basically just, yeah, we want you to talk. No, you're going to talk about this. Like, all right, fine. And then Landy rants began. And look, not exactly the nicest person about certain things, but never going to take anyone down personally, unless they really deserve it, like scammers. In general, scammers and shills are the ones that I target, or fake ass traders, because there's a lot of them and they're not hard to pick out. It's just that most people that are new and don't have trading experience and can't recognize the fakery, you know, they end up absorbed into this stuff. But yeah. And also, for a long time, some of you may know if you've been around crypto for a while, crypto is just freaking full of degenerate idiots. And a lot of those degenerate idiots who really don't know what the hell they're doing managed to get rich because they got lucky and they were in the scene. Prestige Worldwide boats nose. Yeah. Macro morons. Oh, JR, my buddy. Good to see you. Good to see you. The 10-second chart says hello as well. There is a lot of freaking macro morons, man. And it really bugs the crap out of me when there's somebody that I respected at one point. Man, that really bugs me, especially when they try to argue with me like they know better because now they've got a following. And it's like, oh, man, F you. There was once a day when my account dwarfed yours and you knew who I was And now that I'm a rando, you want to try to shit on me. It shows your true freaking colors, man. That kind of shit pisses me off. Excuse my language. You know exactly what to poke at, JR. I love you, buddy. Landy's ways. Yeah. Yeah. Oh yeah, it is, Ivan, it's definitely a what grinds my gears. Like that's literally what they were prodding at. uh that's amazing. Yeah, it what really bugs me is there's when I went and like kind of killed off my big social media presence that I had, very specific personal reasons, nothing really nothing to do with even the social media accounts themselves or like the communities or anything like that. But um, this is a small enough community. My son is disabled and requires 24-hour protective supervision, and then I have muscular dystrophy, so a lot of personal health stuff in the family all hit at once, and it was like this is nothing. I can't maintain this. I'm basically gonna. I have to let the people know that need to know and kind of ghost off social media. I didn't have any paid platforms or anything anyway. But when I came back as a different account and a different personality, so to speak, uh, the there's people that I knew and still know very well that don't know that this is me. Um, Maybe if they tuned into the stream, they'd find out. There's a few who've picked up who I am and who I was and made that relation. I'm Landy. I've never changed. This is an old username, so it's an old account that I picked up anyway. So there's people who also understood that, but there's a lot of people who turns out their facade falls apart when they're challenged, and they think that somebody doesn't have a following, and it's really sad to see. Shows people's true colors. And then there's really good guys who understand, and will give anyone the time of day. On crypto Twitter, one of the bigger names is Credible Crypto. Great dude. There's a few others just like him, basically. I pretty regularly interact with him and his tweets, mainly because he's just a solid dude. He interacts with all of his followers. He does a good job explaining himself, and moreover, he's not a dick. And then there's a lot that are. And then I know Baba on Twitter. He's got a fairly large following. He's an awesome dude. He watch him interact with his followers and other people, and just like there's good people out there. It's just you see people's true colors when you are a smaller account, when you're kind of a nobody and you're getting into the game. So, you know, to kind of answer that question about what grinds my gears, it's usually what most people would agree as, like, jerk behavior. And then you've got the whole set of scammers. They're everywhere. And some of them have massive followings. Bitboy correct. What? I chewed on that last word for a reason, but you all know who he is. And there's many more like him. Yeah, I appreciate the sentiment, Baba, but that's not my goal. My goal is to hang out, teach people the knowledge that I have while I am still here, and have fun, grow a community that can, outlast, anything that might even happen with my channels or my socials. It's about connecting people together, educating people, and I had this conversation with a couple guys the other day. So there is, a lot going on in the crypto space right now. There's a lot going on with CBDCs. Um, there is, a lot going on with the wider investment market and their interest in crypto and their um, ways in which they might try to grab liquidity and or move liquidity. And one of the main things that I have explained and that we in my friend group and we've talked about at length is we're all still very early to crypto, and we'll be getting on the train with the big boys. And once crypto and all that is established, that's when the masses will come. And there will be a nice big pop for it. And then it's going to be over for probably a very long time. It's more about where do things settle. For as late as you might feel to the game, you are actually still very early. Realistically, with institutional investors, with the bills that just passed in the finance committee and what was that, the agricultural committee? No, I don't know what other one was. Why did I say agricultural? I don't think it was ag. It was finance committee for CFTC and SEC stuff regarding crypto and stable coins and wallets. Look, part of the reason they're laying down the tracks, and one of the discussions was somebody had mentioned, hey, it's they're paving the way for Paxos USDC and stuff like that without Paxos, or it's like BlackRock preferred. And like, yeah, it might be, but everything's going to end up in a Fed now CBDC system at the end of the day. And the bills do open up tech companies having their own coins as well, their own stables. So you're gonna end up seeing, if it does go this route, you're gonna end up seeing a lot of stables for different things, so that they can maintain control of your dollars, your U.S. dollars in this case for me in the United States. Your Amazons, they're afraid Elon Musk might get into stables. That's because they know that he's probably been talking about it with developers and stuff. And it's one of those things where you're probably going to find, like, okay, I want to shop on Amazon. I can either shop in US dollars, or Amazon now has their own stable. And for converting my US dollars, much like buying a gift card, you lock it up with their stable and you get extra benefits. But that also means that they're maintaining control of that liquidity. You're probably going to see that across the board. Now, that one of their big things that they were afraid, Elon Musk, because he's the free speech guy, and they want to, I'll stay out of that conversation anyway. They don't like him, so that's the guy that they were picking on for that little segment. But and one of the bigger things is if the big institutional players don't want to deal with the USDT and they prefer USDC, they're not gonna kill USDT. They're going to use it, meaning they're gonna take it and have people move their liquidity from USDT to USDC if that's what they're going to use. Because at the end of the day, the exit from that entire system is going to be a CBDC FedNow style exchange. So we're gonna end up seeing this stuff everywhere in everything. And I could get into the reasons why. I have a pretty good understanding, as I give you guys technical analysis and I don't talk news. There's a reason I don't talk news. There is some stuff that I do actually know that I cannot talk about because NDAs are real things. I don't really talk about I'm semi, basically have to be semi-retired at this point. So, but I still do work every once in a while on contract. And there are things that are coming that, whatever it looks like, I might not have the specifics 100% correct, but I can tell you that you should own Bitcoin. Um, you should have hardware wallets. Take control and custody of your own coins. If it's not a physical, at least get in and understand, holding your own keys in some sort of a hot wallet scenario or a cold wallet on a cold wallet app, something like that. And make sure you understand how to do that. Still early days for this stuff, because by the time the 99.9% actually pick up on this, most of this stuff is going to be established. We've already taken the train into the station, basically. That's how, all us plebs are actually early. We get to ride the train with the big boys when it actually gets rolling. And then by the time they're actually flooding, liquidity into the system, you're going to see the big pops. We get our big pop, and then it's going to be over for a long time. Then it's just back to trading. Just less holding, more trading. I will tell you all here that are still watching me just ramble on, which I do apologize, but I will tell you that I am a big supporter of Bitcoin. Big supporter of Bitcoin. And I actually have had conversations much like what you may have heard come out of Jason Lowry's book or Camp. Because, the ideas that he's expressing in that book aren't new, but they are well put together. And he has a very good thesis for how things could go. It's not necessarily a new thesis, but it is an advancement of an older thesis or a kernel of an idea that he's expanded upon. And I'm very much in line with his thought process regarding power projection through Bitcoin, and also that Bitcoin will be everywhere. You will not be there. Bitcoin will underpin the entire system from the electrical grid on. You will not have, everything will touch Bitcoin at some point. It's the Trojan horse for CBDCs, so support it. Because they'll accept it, they'll welcome it with open arms. And then at the end, it will destroy that CBDC system. They will try to control it. But if you own your own Bitcoin and you hold it, you understand how to do it, then some of the more scary things can be headed off at the pass. A little bit of checks and balances. But that's going to do it for me. Ivan, I'll be fine. Yeah, no, I mean, like scary health stuff is scary health stuff. You never know if you're gonna. It's more that I take care of my family. Me personally, I have good days and bad days, but it is what it is. Life-changing events. If you have kids, it's already a life-changing event. But when you have kids with disabilities, especially when it's extremely severe, it changes who you are from your core. So, and it also, you end up living a different life. So I get to hang out with a cool little kid and trade, talk to you guys. So it's a benefit. Wouldn't change it for the world. Let's put it that way. Talk about the future. It gives me hope that I can still get in. You're in. If you're here, you're in. You're early. It's still early going. Doesn't mean that there won't be downside, even from where things are now. Maybe even severe downside. But you're in. Need a new exchange. I agree. There's more and more decentralized exchanges will be popping up. I mean, one of the most popular ones is Apex. But there'll be more. What I would like is a good decentralized Bitcoin exchange where you can do inverse and or stable pairs that actually has liquidity. Now, there is exchanges that have that. Usually they're not very good, not very reliable, and their liquidity is garbage. So, yeah, it can be tough, especially when you're trying to make bigger orders. That's what we really do need, is decentralized Bitcoin exchange where you have BTC inverse pairs and, BTC stable pairs that is not complete garbage. Yeah, no worries, guys. All right, well, I am going to head out of here. I do appreciate you all hanging out. Do me a solid, likes, comments, subscribes. Obviously, you're already subscribed, I believe, most of you. If you're not, go ahead and subscribe. We got some, I do say we because there are other people that are contributing to this effort. There's some cool stuff planned, and we're going to go from there. And, yeah, I'll talk to you guys at some point about DeFi. Now is not the venue. I'd want to show you examples, and actually maybe at some point I'll do a video, with Apex. The problem is I don't want to show anything substantial wallet wise or information wise there, but I can go through and maybe walk through like a demo version of it at some point. I would like for them to, Bybit has approached me, but I asked them if I can do a deal with Apex instead. But yeah, we'll see. If that was the case, I'd make them give me some incentives for anyone that would want to try it, and then make sure that I have all the documentation in order to show people properly. But yeah. All right, guys. Hey, you all have a wonderful weekend. I'm going to have a fun one. Got some cool stuff planned outside of just trading. But if anything interesting happens with trading, I mean, this 10-second chart, look at this. It's going wild. It's probably going to moon. 69,420. We're coming at you right here. No. But I hope you have a wonderful weekend. And I will just do my normal little outro here. I want to thank you guys for hanging out with me. You have a wonderful weekend. Wherever you are in the world, please stay safe. And of course, as always, trade safe. And with all of that being said, Landy out.